Energy security also in focus, so let's bring in Charu Chanana, market strategist at Saxo Markets. So, Charu, just like your thoughts first on this OPEC plus deep production cut. What is that actually going to mean for the Asia Pacific that is already struggling with high inflation?
Yeah, I think it is, signaling first thing that there will be further tightness in the oil markets. They have announced a production cut of 2 million barrels per day, which, if you take into account the quotas of the members, it will still account to about, 1 million barrels per day of drop. Some of it might actually be, replenished by the U.S. Through their strategic reserves or by allowing some of the key oil major companies to, carry on with the oil production. So that could fill the gap a little bit, but it does signal that we are in for some further tightness in the energy markets, and especially if Chinese demand comes back, later this year or early next year, that could, put further pressure on the tightness in the energy markets as well, and signaling more inflation concerns and lower growth as well going forward from here.
And also because winter is coming, both figuratively and literally, that could mean a worsening of the power and gas crisis in Europe that we're bracing for. What sort of ripple effects do you think that would have for this part of the world?
Asia is certainly not spared, from this energy crisis, despite not being so interlinked with Russian supplies. And that's because, we do have some of the countries in Asia which are big LNG importers. And, LNG comes in tankers. It doesn't come in pipelines. So it's easy to divert that. And given that Europe is now paying a higher price for those LNG supplies because of the disruptions that it is facing from Russian supplies, so Asia is losing out on those tankers as those are getting diverted to Europe. So certainly, LNG importers like China, like Japan, South Korea potentially could see some pressure there. And I think there would be some focus on kind of broadening these energy supplies to add in some bit of renewables, but keep fossil fuels as the base. And also, I think like with Japan, we are seeing a push on nuclear energy as well.
But are we seeing a case of some emerging markets just not being able to compete with European buyers of LNG because it is a market where who pays most will get the supplies?
Totally. It is a case where I think fragmentation in Asia will become considerably deeper. We've had the flavor of this crisis and we've seen what happens, with the kind of things that shaped out in Sri Lanka earlier this year as well. And there are a lot of these weaker emerging markets who have heavy exposure to imports of energy as well as food. And both of them, prices are running quite high. So we will see some of the other weaker emerging markets, potentially facing repercussions like that and not being able to secure supplies of energy, of food as a tail risk factor. I'm really concerned if this could mean a shift away from dollar-based trade finance in the Asian region as well.
Okay, Charu, all this also means that there needs to be more investment in energy security. You talked about renewables earlier. What sort of investment opportunities does this provide to market participants?
So if you look at it from a very near-term basis, the only real possible solution to meet the scarcity of energy is by cutting demand. And we've actually seen some measures in Europe in terms of using artificial intelligence to cut energy demand. For example, we've had the Barcelona train system use artificial intelligence to control air supplies, and that has considerably about 25% reduction in their energy usage. So those kind of solutions would be, of course, important, and investment is likely to go there in the near term. But in the more medium to long term, as I mentioned earlier, most of the economies, are facing this deglobalization threat, and they want to secure their energy supply. So there's going to be a lot of investment into first securing your fossil fuels, which can really meet this demand, plus at the same time adding some bit of renewables there, because, something like solar, wind could not possibly meet the demands at the kind of development that they have right now. So a lot more investment needs to go there as well. And I think this will be a very broad basket of energy supplies for a considerable future. We cannot ignore fossil fuels, but at the same time, some progress on renewables is likely to continue as well.
It's a tricky energy transition. Charu, we'll leave it there for today. Thank you very much for sharing your analysis with us. Charu Chanana is market strategist at Saxo Markets.